we'll have a strong focus on Neobrokers. So it'll be a slightly different meetup than usual because we won't have company presentations, but we have a very interesting panel discussion. So just to dig right into it, let's go quickly through the agenda for today. Right now, we are in the welcome words from Holland FinTech. And by the way, I'm Gabriele Pippo. I'll be your master of ceremony for today. And then we'll move forward to the traditional FinTech monthly market update by our very own founder and CEO, Don Ginsel. And then we'll get into the core of the event where we have lined up, as you can already see, they have their cameras on, but we have lined up a group of, let's say, FinTech superstars within the Neobrokers space. And they are we'll have a panel discussion with the CEOs from Bucks, Lynx, and DeGiro-Flatex. Of course, this panel discussion will be moderated by our own very own Don Ginsel and the director of F5 at ING, Henk Ellens. Then, of course, there will be a lot of chances for you to ask questions during the panel discussion, and then we'll move forward to the FinTech monthly pub quiz, and at the end, a few closing comments, and we'll look at the upcoming events. Without further ado, I'll stop talking and leave the word to Don for the FinTech monthly update. So Don is already on stage. Whenever you're ready, feel free to take it away.
Thank you, Gabriele. Let's indeed get going. Here we go. All right. Oh, you're also sharing your screen already. That's also okay. That's even better. Then I'll stop that. Once is enough. So good to see you all again here in September. We're very excited, I think, because it seems like the markets are opening up again after a good summer holiday where people have experienced life outside their COVID home. We see that things are getting a bit more fun and that people are more into business again. So we're very much looking forward to see also what happened in the fintech space and tell you a little bit about it. And of course, like we do every month, we try to wrap it up at the end of the session with some questions in the Kahoot pub quiz. So pay good attention and hopefully you'll learn a little bit about the latest developments in fintech. Next slide, please. So what you see here is actually the news that as we capture it every week in our global fintech news update. Please subscribe if you want to stay fully up to date of everything that happens across the world in fintech. And every month we present you just with a couple of highlights that we think are really interesting. So what's interesting here, for example, is that we see a new bank, Starling, actually acquiring a mortgage lender, which I think is quite an interesting perspective. So you see that a lot of the neo banks started out with a relatively narrow proposition, and they see that they now very gradually expand their proposition. They're becoming much more sustainable, and I think Starling is quite unique as well, as it has been already, I think, for over a year profitable. Besides that, it's interesting to see that, of course, the IPO crazy keeps on going. The stock markets are going through the roof, and that appeals a lot of companies to go for a listing, either through SPAC, which is highly popular, or through IPOs, like we see, for example, with Policy Bazaar. The Indian online insurer is doing very well, especially also on the back of all the digital identity infrastructure that has been run recently there. Trying to raise over 800 million, quite an amazing amount. Recently, also, we saw that Square made a move to buy Afterpay. Of course, we see that buy now, pay later is very popular still. And you see now that payment operators like Square are actually getting keen to jump on the bandwagon there and make sure that they, like, for example, Klarna has their own payment means. They look to strengthen partnerships to actually make the buy now, pay later a part of their offering, as we see that it actually still helps merchants to convert to more sales. Of course, we saw one thing that was very often spoken of is how Uruguay actually allowed crypto to be a genuine payment means. Quite exciting, and I think a lot of the world, he's lauded for it as well as being scrutinized for it. It's people think it's quite a big bet that he allows people to use crypto as a genuine means of payments. But of course, at the same time, they're struggling a lot with their currency anyway, and this might actually have a kind of stabilizing factor in it. But it's an interesting experiment that a lot of people are following. Well, a nice merger between Northern LifeLocks and Avast. I think quite a big deal. We were just talking a little bit about security already. You see that these firms make together quite a big chunk out of the security stack that most people will also be using at home. Quite interesting. ESG is still in focus, as we see, for example, with Aspiration also going public via SPAC. Specs, actually, we probably should be talking about that also later on in the panel discussion. Quite an interesting development, I think. PayPal is looking to actually also use crypto in the UK. Of course, we've seen that financial institutions have been quite wary to put cryptocurrencies into their offering, but PayPal is now following quite some others, like Revolut, for example, that have actually made crypto a genuine part of their portfolio. Quite interesting in different ways, either through as a payment means or as a means of investment, which again, of course, also touch again on the investment perspective that we're talking about today later on. We see basically also that wealth management has come to Amazon. You see that also the big retailers are, or the big tech firms like Amazon are moving into the fintech space to add financial services to their offering. They've got such a big client reach that for them it's relatively easy, of course, to make conversion in new products that they put up. And you see that there actually wealth management is quite an interesting one, because once you're actually on the portfolio of people, you have quite good insights into their spending. And that potentially also gives some new potential for also the collaboration with traders. And we see that Google actually now also looked into a new product addition. We know, of course, about Google Pay, but they also now looked at making fixed deposits through Google, which I think is also, again, another take on big tech moving into the financial services space. So even though August generally is a bit quiet, I think we've seen quite a lot happening. And the same goes for investments. If you look at the table here, you see that there's quite some money that has been invested in Chime, with now worth almost 23 billion. That's quite a huge amount. For the rest, we see that Lime and Hippo Insurance have done very well to raise investments, also deep into the unicorn status. Interesting to see so much move into the insurtech space, because it has been a bit laid back compared to fintech, for example, feels like investing and payments, but insurance is really moving up now into the value chain and becoming a big chunk of everything in fintech. For the rest, we see that wealth management is also an important portion here, for example, with Drive Wealth. Next slide. Then we go and look at what happened in Europe. There we see, of course, Lime Insurance again. And besides that, we see payment firms still firm at the top in Europe with Rapid and Zaps and CloudPay. So that's where I think the most important part coming. I think quite an extraordinary one is Bitpanda. Quite a lot of money regularly invested in a firm that deals mostly specialized in decentralized finance. So I think that's interesting to see, and I expect also more companies in that space to move up in the higher rankings of funding over the coming period. Then what happened in the Netherlands? That's usually a small country, a bit less deals. We then again saw two interesting deals: Carbon Equity and Orderly, getting a nice investment. So definitely two companies to keep an eye out on. Then to check out what kind of research we saw in the past month. That's the next slide. Yes. So we also gather numerous research reports that we share through the newsletter on Friday. And as a highlight, we just want to pick out two topics that we think are relevant for you to keep an eye out for. One here is on the left. It's a graph from how much ransomware attacks actually increased. We know, of course, that especially due to the whole digitization wave that COVID sparked, more people are now doing things online and actually also making them more vulnerable very often for security breaches and for example, ransomware attacks. So that kind of explains the large increase over the past year. But definitely good to keep an eye out for. And I think for financial services companies, they need to be fully on top of this game. Another one is, I think, a graph by Block Data that says something about the investments in Can we go one slide back? the investments in crypto companies. So you see that actually the big names, Citibank, UBS, ING, BBVA, they're all very active in looking into crypto and blockchain. As a general part of their offering, they still find it very hard from a regulatory perspective, especially due to AML concerns. But you see that they all understand that the technology and the uptake that you see in the market needs to lead to some kind of action. Then to wrap it up, we always have 2 quotes for you that are coming from our analysis piece, right? So we also try to look at what the opinion leaders say about the developments in fintech, and we thought that these 2 quotes were interesting from Olivia Siboni and one from Andrew Arwas. So I think these are just some thoughts to leave you with. I think it's quite interesting to always get these different perspectives. I don't want to take it too long, so please invite you to sign up for the newsletter via our website if you want to stay on top of the market and get it into your mailbox on a weekly basis. And of course, we're always happy to take any suggestions. But I'll leave it like this for now. So I hope you find it enjoyable. And of course, we'll go back to this a little later on when we do the pub quiz. For now, I'd like to call Henk forward. He's already there. Henk, very nice to meet you here and see you in the meetup. You're an advisor at ING, right? Doing corporate finance and M&A.
Yeah,
and I think with your specialization in fintech, I think it's really interesting to see what kind of a network you have and how you bring everyone together. So we're very happy that you're here and that we together have been able to pull together such great speakers for in the panel in a moment.
Yeah, thank you, Don and Gabriel. Let me first introduce myself. So my name is Henk Ellens, and I'm a director in the FI advisory team of ING. We advise financial institutions and fintechs on M&A and capital raisings. For example, we advised the shareholders of DeGiro on the sale of DeGiro to Flatex. And the acquisition was mainly paid in shares, and the share price quadrupled since the acquisition. So it was a very good deal for all parties involved. It's a pleasure to organize this event in cooperation with Holland FinTech. And I think we have a great panel with CEOs of 3 leading online brokers. So thank you all for joining. And we are looking forward to discuss the latest trends in this sector. It's clearly a hot sector with huge inflow of new investors. There's increased digitization accelerated by COVID. We see increased valuations and capital raisings. So let's start with an introduction round where everyone can introduce themselves and also to give a short introduction of their companies as well. And after that, we can start with the questions and the discussion. So, Mohammed, the floor is yours.
Yeah, thanks, Henk. First and foremost, warm welcome out of Frankfurt. Just came in today from Amsterdam. Thanks for inviting. Thanks, Henk. Thanks, Don, for organizing. My name is Mohammad Shahur. I am the global CFO of the FlatexDEGIRO group and CEO of DeGiro. Now with the company for 7 years, so in my 7th year actually. I started this whole journey 7 years ago with the Flatex side in Germany when we used to be a German hidden brokerage player. And I've developed over the recent 2 years, Henk, you mentioned it, to the pan-European leading online broker. We offer our services in 18 countries all over Europe. Today with almost 1,000 employees, are aiming for this year a total of more than 2 million clients all over Europe and more than 90 million transactions. And understand ourselves, obviously, not only as the market leader, but also as one of the pioneers of the discount online brokerage business. We started both Flatex back in 2006 as literally the first discount broker in Germany. And with DeGiro in 2012-13, we started the retail business also as actually a discount broker. Back then, with the former founders of DeGiro, to challenge the established banks and players like Big Bank and actually ABN, ING. Progressing very well. A lot of big steps ahead of us, like with most of our peers in the market. We are currently in a big structural movement with a lot of secular trends that are bringing more and more people into capital markets. And our clear vision and ambition is to retailize this access to capital markets with the 2026 vision to have up to 8 million clients and to settle up to 350 million transactions. I myself, my background started as an investment banker as well with the UBS before I joined PwC and spent a couple of years on the transaction side there. Then left the banking industry, joined Rocket Internet, and learned what the other side looks like, whether the grass is greener on the e-commerce side. Found out that the greenest grass is if you combine both. So this is how I came to Flatex. Thank you.
Okay, thank you, Mohammad. Yorick, can you please introduce yourself?
Thank you. Sorry, I was just looking for the unmute button. First of all, also thank you very much for organizing this, Henk and Don. I think it's good that we're finally giving some attention to the retail brokerage space. It's a booming industry, and obviously we at Bux try to be at the forefront of what's happening, especially in the Netherlands. Quick introduction first on Bux. Actually, we started in 2014. Back then, really focused on more shorter term speculative trading and really tried to make investing accessible, intuitive for mostly the newer generation, but also people that have a latent interest in investing but never actually started. Our vision is actually still the same. We also try to make it really affordable. So from that perspective, we believe that affordability is key in the investment space to make it accessible. We started with the first mobile application. Afterwards, we basically launched the second one, and we hard launched in January 2020. And that's currently our flagship called Bux Zero, where we try to make investing, basically so accessible that you can do it via zero commission, but also in a very intuitive and simple interface. We have also acquired a full-fledged crypto platform, so we now have 3 different product lines. We've just over 500,000 customers. Our focus is really now on Belgium and the Netherlands, but we are now expanding quite rapidly in Europe, and we're offering our services now in 6 countries in Europe, and by the end of the year, we'll be live in 8 countries in Europe. Mobile first, so I understand the topic is Neobrokers, so I think it's safe to say that at the moment we're the only Neobroker in the room, and from my perspective that is just the mobile accessibility that we're trying to achieve, right? And that is also a little bit the difference, I think, between Bux and what is more the established brokerage firms, is that we're really trying to cater for the newly investor on the back of course, the low interest rates. Happy to tell you more, but we'll do that in this panel for sure. Some background information on myself. I've got actually a background in ING as well, Henk. So I don't know when you joined ING, but it could be the case that we're former colleagues. I was with ING between 2007 and 2014. Before I left, I was in the corporate strategy department, was a senior manager, and so worked with Ralph Hamers, for example, to set up the new digital strategy. And I got the chance to build up Bux from scratch together with the rest of the founders. And since then, I'm with Bux. I started as COO, and since around 6 months ago, took over the helm from the previous founder as CEO. Thank you.
Okay. Thank you, Yorick. Then we move to Tycho.
Yeah, thanks, Henk and Don, having me here. Very short introduction on myself. So I'm Tycho, co-CEO of Lynx, been with the company for 14 years, more or less since the start. We focus mainly on advanced trader, and I think advanced traders, that also distinguishes us very much from Bux, I would say, and I would definitely not call ourselves like a neo broker. It's a very different target market we focus on. This also means that we have on the actual numbers quite a different amount of clients in our books. So it's around 60,000, but they are very active, experienced type of traders, different size, skewed towards US markets. And we offer them pretty sophisticated platform. Of course, also mobile app, which is, I would say, gaining lots of popularity in the last few years. So it's US market, stock trading, option trading, a bit of a different model because we do charge commissions. So that's maybe a topic for later today. And I myself, I'm based in Amsterdam, currently in our Prague office. So we just missed each other, Mo, because I fly back tonight to Amsterdam. We have 5 offices in Europe, and we focus on 10 European countries at the current moment, and looking forward to expand that to even more countries. But again, very much focused on the more advanced type of traders.
Okay, thank you for the introduction, Tycho. I would like to kick off with a question for Mohammad. Mohammad, you're the fastest growing European broker, with 500,000 new net customers only in the first half of 2021, and 1.8 million customers in total. I think this is an amazing growth. What we discussed, it's clear that there have been favorable market conditions. We see high volatility, a continued low interest rate environment, high real estate prices, and digitization, which is accelerated by COVID. I saw that the average trading per customer increased from 37 times per year in 2019 to 73 times per year in 2020. What is your view on this level post-COVID? Will it be higher than pre-COVID?
It's a very good question. I would wish I could look into the future, which would help a lot. But absolutely, we have a certain feeling for it. If we consider the markets over the last, I would say, 2 decades, trading activity is usually very much linked to volatility. There's even a super high correlation and a significant correlation between volatility and trading activity. We see it in our figures. So per se, I would say that the markets, and this is also what we have seen over the last decades, you have a certain level of mean reversion with respect to trading activity. So trading activity is most probably going for a broker like us over the next year back to trading activity of what we say usually 35 to 45 trades. So 3 to 4 trades per client per month. This is what we expect given our customer base. However, this depends very much obviously on the brokerage business and the type of clients that you use, right? So you might have, for example, big players who are focusing on, and this is, if I'm not mistaken, what Lynx is also based on, interactive brokers technologies, where you have really the traders that are looking for a heavy environment to trade. So these clients are usually carrying a higher average in trading activity, like you would find with many Neobrokers, right? So you will see a mean reversion in trading activity, and thus for us it's more important than to focus on trading activities to focus on customer growth. I always say we as a management, we cannot control the activity of the clients. We can help them, we can give them confidence, information, product offerings to try to increase the level of engagement between broker and client. However, the focus of our franchise and the focus of our business is how can we grow the number of clients into a more sustainable and long-term perspective, because then you become more and more independent of trading activity. However, volatility is always great for our business because it shoots up trading, it shoots up trade activity, it creates what I always call windfall profits for brokers. It's somehow a hedge that you can have against volatility.
Yeah. Okay, that's clear. Thank you, Mohammad. Yorick and Tycho, you have I think, a different type of customers. Yorick, I expect you have a lot of younger investors as clients, and Tycho, you have more experienced investors. Do you see the same trend as Mohammad is saying, so that it's trading activity is moving back to pre-COVID level?
To be honest, I completely 100% agree with everything that Muhammad said. I do expect actually that trade activity will remain high for the foreseeable future.
Yeah.
And I'll explain you why. First and foremost, there is no end in sight with regards to the low interest rates. And we already saw kind of an acceleration happening before actually the COVID lockdown happened, where people were looking for an alternative towards their savings account. Because if you purely look at savings and you apply inflation, and how some people are dealing, of course, with wealth tax and those kind of things, people are losing money quite rapidly by just keeping their money on the savings account.
Yeah.
Now, Europe, especially mainland Europe, used to be a very savings culture, right? People used to put money on their savings account and they basically experience compound interest. People start to realize more and more that actually that does not provide the return that they're looking for. And so there is a sort of an Americanization happening of the retail investor in Europe. And that is driving, obviously, volatility as well, because there's a lot more retail flow in the markets than there used to be. But also because there's no end in sight with regards to that lower interest rate, and because there are a lot more accessibility points for people to start investing, I do expect that for the foreseeable future, that volatility will remain and people will stay more active than what we've seen pre-COVID.
Maybe from my end to add there, because I think we're very much aligned, but I would say that volatility is currently super low, right? If we look at volatility in the market, it's only trading at, what is it, 17 points, 18 points in the US. And if you compare this towards volumes in 2019, we do a lot more volume. And I'm pretty sure that's also the case for Yorick and Mohammad. So it's very different. Volatility is super low now. And we're way above pre-COVID volumes, transactions. So it's a very, very good environment due to the reasons explained before. Just when volatility goes up again, what will happen then volumes will really go through the roof.
Exactly, that's what I also expect. Yeah, I do expect at some point that a volatility. So there's volatility is often linked to events, right? That's what we've seen historically. Think about Brexit. Think about the Trump election. Think about the announcement of the lockdown. So you're right, Tycho. Volatility is relatively low, especially if you compare the volatility levels and just look at the fix, right? If you just look at the price of the fix, you see that it's relatively low in comparison to the moments that I just described. If there is another moment where there is a reason for more market volatility, then there is a synergy effect for sure happening.
Okay, that's clear. Thank you. I've another question for Mohammad and also for you, Tycho and Yorick. What I think is very interesting is the potential of the online brokerage market. And if I look at you, Mohammad, your ambition is to grow your client base from 2 million to 8 million in 2026. And it's clear that growth can be partly explained by the growth of the brokerage market itself, and the percentage of people that are digitalized, online banked, and active in online brokerage is increasing. What's quite surprising is that in developed markets like the Nordics and the Netherlands, 35% of the addressable market is active in online brokerage, while in the underdeveloped markets like Germany, France, Italy, and Spain, this is only 8%. How long will it take, do you think, before these underdeveloped markets reach a similar level of 35%? And what is driving this?
I mean, you should keep two things in mind when you bring up these figures. The first thing is that we're talking about when we refer usually to the underdeveloped G7, the underdeveloped continental European countries, to a population of almost 300 million people that are in the age of, give or take, 18 to 65. So out of this population, I would say the data that you're referring to is, I would say, 1.5 years old. So if you would look what happened over the last 1.5 years, it's maybe went up to 10%.
Yeah.
But we're still absolutely, the brokerage industry is still absolutely underpenetrated compared to the Nordics, where you even have levels of almost 50%. The UK with the high 30s, even in the Netherlands, where you have 20 to 30% of penetration in the online brokerage industry.
Yeah.
So continental, especially Western and South Europe, is absolutely underpenetrated. Now the question is, where do we see the growth coming from? And we consider it twofolded. So you have on the one hand side, you have already almost 30 million brokerage clients. And the question is, where are these 30 million brokerage clients? 90% of them are sitting with still old-fashioned incumbent banks. You know, they're still sitting with the Comdirects in Germany, for example, or the Consorsbank. They're still sitting in France with Boursorama or Bourse Direct. They're still sitting with, for example, also in the Netherlands with the ABN, or sorry to say it that way, but with ING, like not with the brokers itself.
Yeah.
And you still have markets that are dominated by monopolists, right? Don't forget about Italy, which is literally a brokerage monopoly with Fineco. The same applies for Switzerland with Swissquote. So you have this 30 million clients that are sitting in very legacy business models. And one of our key focuses, how can we steal market shares? So how can we get out of these 30 million that are already brokered more and more clients to our platform? Given the much better platform, the much better apps, the much better offering of products, a much wider range of products, and for a price that usually is 80% lower than with these incumbent players. The other perspective is that there are 270 million people that are not brokered yet. And to understand, however, how much we believe the brokerage industry needs to get to levels of the Nordics, you have to go to a higher level. I always say brokerage is the first derivative of online banking. And if you consider that still 40% plus of the continental European population is not online banked. So imagine there are 40% in continental Europe of people that don't have access to online banking. They still walk into branches, and if you come to Germany, you see it. This is like culture. It will take time. It might take 5 to 10 years until this high level of physical banking is over and is replaced by younger generations that are running with 100% digitization level. And the more and more digitized people we have, the more and more online banking we will have, and the more online banking we will have, the more online banking we have, we will also have more online brokerage. So for us, it is now a 5 years vision where we say, hey, we believe we can maybe steal 1, 2, 3 million clients, and we can win 1, 2, 3, 4 million clients in the market out of a growing market. And as Yorick and Tycho said before, the market is absolutely. We have a window of opportunity of maybe the next 3, 4, 5 years until we will have a big crash at a certain point. I don't know when it happens. Maybe it happens also in 20 years only. But this window of opportunity there, and this is the one that we want to utilize.
Yeah.
What are you referring to? A crash in the market, like that would then also demotivate a lot of people to invest, or?
Exactly, but this is exactly the point, that if you look today into the market, you don't see, I at least don't see the necessary requirements to see that long-lasting crashes that we saw in the dot-com bubble or in the 2008, 2009 bubble. So this is why I'm saying there is a window of opportunity for brokerage, given the low interest rates, given the secular trends of digitization, younger people, the retailization of capital markets, right? Don't forget, 30 years ago, you only could buy big industrial companies. Today, you can buy all the household companies that you love, that you use. So there's much more attractiveness also now by the capital markets towards younger retail clients.
Yeah. No, that's clear, Mohammad. Thank you. It's clear there is a big opportunity, and also in the underdeveloped markets. Is it also where you see an opportunity, Yorick, or what are the countries you focus on?
No, it's huge. I mean, look, we of course launched in the Netherlands, and Belgium is also one of our home markets now, which are very developed countries. And especially the Netherlands, I mean, a lot of people already had access relatively. A lot of people had access to financial markets already, and still we've seen tremendous growth. But I do believe that most of the potential comes from countries that are currently completely underdeveloped. And in the end, it's going to take time. I agree with Mohammad. The thing is that you need to create those markets a little bit. A lot of people are not aware that, they're first and foremost, they're overpaying a lot. But second of all, the complexity, the angst that is currently still there for people to start, investing for the first time. It's scary. And people don't do it yet. While there is definitely a latent interest. And we've seen that from all different researchers, all different surveys that we've done in all the different markets, that there is actually a large interest, but people are still not actually doing it. Now, and we are trying to really make it accessible and really trying to also focus our efforts on education, really to make sure that people that are scared, that do have that angst to start investing, explain them what a good strategy is and how to actually do that. And that's not a short-term thing. That is a long-term vision you need to apply, and it's going to take a lot of time. So I like actually the fact that Muhammad is looking in a 5-year time horizon. Normally, especially within banking, 3 years is basically the max to look at. So a long-term strategy definitely is very suitable in this case. And I don't see this slowing down, and I still see a massive opportunity. And this is one of the reasons, of course, that you see extremely high valuations nowadays as well in the retail investment space.
Yeah, no, thank you, Yorick. And Tycho, you have a very big market share for experienced traders in the Netherlands and Germany. What are your target countries for growth?
Wherever Yorick and Mohammed are paving the way for us, right? So this is what also really plays into our strategy. Like, they're targeting these beginning investors and probably to some extent also a level further, but we're at the high end of it, right? So these clients who start now, hopefully in a year or 4 or 5, they end up with us, at least a portion of them. So if you look at from that perspective, you can see that the more developed markets like the Netherlands, but also Belgium and Germany to some extent, they have already a pretty decent target market for us for these advanced type of traders. But like, we're also active in the Eastern European space, but that's it's a bit more difficult there to grow decent numbers. But it's just a game in time. Like, the best times lie ahead of us. But it's a very it's a niche, a different target market.
Yeah. Okay, thank you, Tycho. Yorick, what I would like to discuss with you is the capital raise. Bucks raised $80 million last April from well-known investors like Brokerage and Tencent. That's a big achievement. So congratulations with that. You will use this to further expand in Europe and expand your commission-free investment app Bucks Zero. What kind of advanced features are you planning to introduce?
Well, it's the investment round is used for two means. One is obviously to get a foot on the ground in all the different European countries. That goes without saying, because in the end, our vision is to become a leading pan-European neo-broker, and especially in the mobile investment space, become the number one. But next to that, obviously, you need to make sure that the product is up to a certain level, and you need to grow with your user. Like Tycho just explained, people, when they start, they're very basic in their knowledge. But once they start investing and they get the grip into it, and they basically also read into it, they get to a certain level of knowledge and experience. And then you need a little bit more sophisticated features. So that's also something we're looking at. So there are a few things that we are currently working on, and that's of course good to mention. It's expanding our product offering. We hard launched only last year, right? So it's a very, very early stage application. A lot of early adapters, luckily on our platform, that really carry the product forward. And in the end, we want to make sure that our product offering is well as sophisticated as it needs to be, so people can trade everything they're looking for. And that also means that we're expanding into different types of asset classes, for example, cryptocurrencies, for example, because that also fits with the newer generation. Next to that, think about fractional investing, everything that is basically supporting the accessibility question that we want to achieve. And then we have, of course, the more sophisticated features, which is a step-by-step approach that we're taking there based on client feedback.
Okay, that's clear. Thank you. Yeah, and another important topic I think within online brokerage is the churn of clients. And if I look at bugs or at Neobrokers in general, and they are defined by the simplicity and ease of use of their platform. So given this, you likely attracted a large number of clients who are inexperienced or first-time investors. I can imagine that the churn is a bit higher with these type of clients than, for example, Lynx is focusing on more professional clients and that they are more sticky. What is your view on that? And what do you try to limit the churn? You already mentioned the product features, etc., to make sure that clients stay with you.
Yeah, this is a good point. So obviously, if you're fishing in a pond where people are new to investing, then you have also people coming on board your platform that actually, after they've started with it, they find out, well, this is actually not for me. And that's perfectly fine. However, we do see that there is a lot of people that stay with us, even after, a first drop off in the early stages. So what you basically see is that people come on board. They basically find out very quickly if it's something for them or not. And after that first 1 or 2 months drop off, you see it's actually stabilizing and people stay with us for a very, very long time. Now, how do we, of course, tackle also basically the churn that's happening in the early stages? Education. Because people are churning often because they still believe, even though we make it so accessible, that actually it is scary still and they don't know what to do. Sometimes people feel like they're being thrown into deep waters and we just ask them to swim. They just don't know what to invest in. Now, there are, of course, strategies that you can apply to help people along their way. And think about just applying dollar cost averaging and really making sure that people on a periodic basis, they create a well spread out portfolio and start investing, regularly. And explaining that to customers, educating them on that fact really helps. And people will then create a investment portfolio that is there for a very long time. Now, that is the thing that we're trying to do. But of course, you're hitting the nail on the head, right? That, to do that, you need to make sure that you create a certain market and help people along their way.
Yeah.
But Yorick,
does it also pave the way to wealth management to larger
It's not
extent?
per se wealth, because we're still going to stay self-directed, right? So people still need to decide, what to invest in. But look, we've got products that are like ETFs, for example, that are world trackers, very well diversified. So it could be very interesting for people to invest in. And especially if you look at wealth management platforms, it's funny because people that start using a wealth management platform, they invest in the same types of ETFs, but also on top of that, pay a certain custody fee or advisory fee. So if people understand that and they can do it themselves, then obviously it saves costs and it helps them create a decent return on their capital.
Yeah. No, thank you.
Yorick, can I ask a question? Because what I'm quite curious at is like investing has never been so easy as it was in the past, 6, 7, 8 years, right? So this is where I'm curious to see how that will develop. Mohammad just said it himself, like there will be a crash at some time, maybe in 4 years, but what will happen with the churn if markets change? Like we had that big drop, of course, in March, April 2020, but it recovered so fast. But this is where I'm curious at. When I remember from the different times and it was a long time ago, that the churn was back then higher. People in different markets make it way more difficult to be successful, either if it's investing or trading. And nowadays, like, the churn is, I would say, artificially low, simply due to massively favored markets, which is just going up. And I'm very curious to see how that goes, because if you would be educating people now on a potential crash, they would run away, right? You're just screaming in the desert. Nobody wants to hear that a market can go down, because it can only go up, apparently. I'm very curious to see how that will develop.
No, it's a very interesting point. I think, in the end, the biggest risk I see personally is if people, they start investing into very individual products, for example, and really concentrate their investment on just, also a specific asset class. So if people just invest in Bitcoin, for example, where you see what can happen, right? It goes up and down 10+% in a given day. So that's the thing that we're trying to educate our users about. If you spread your portfolio across different asset classes, or you invest in like world trackers, right? Then yes, a crash can happen. And obviously there will be a hit that people can potentially take. But if you look historically on what happens, and you apply dollar cost averaging so that you're not impacted by that timing effect, then actually you can still get a decent return on the long run. And that is what people need to understand. Crashes will happen. It will happen at some point. Obviously, there will be something, an event happening in the markets, and it will probably not recover as fast as last year. But at the same time, if you've been investing already in a period long before that happens, and you've been applying dollar cost averaging, you already are very in a profitable position, and you can take hits. Now, that is the thing that we're trying to explain to our customers. And well, we don't know what the actual effect is going to be in this new market, DeGiro. You're completely right. And what the impact is on churn. If there's one thing that I do believe in, is that I'm not too worried about it, because actually March 2020 was the largest inflow of customers on our platform, because people always also see a crash as a great opportunity to buy yourself into the financial markets at a discounted price.
But wait, there's a one-off, right? If I look at the past, what we've seen in March, April, the influx of money and clients, it's unbelievable. But if you compare it to the end of 2018, we have very, very rough time back then after the markets dropped, I don't know, what was it, 10-15%. So this was super exceptional, if you ask me. But anyways, I'm very happy to hear. I mean, the worst thing what could happen for our business, not necessarily ours as Lynx, but for all of our business, is that these people get like demotivated at some point. That's my big worry. Like, everybody is into investing now, and what if an event happens and these people will get demotivated and get back to saving? I mean, that would be a decade lost, right? Investing yourself is so popular already for many, many years in the US, and finally Europe is picking up, and I hope we can continue this.
It is definitely systemic risk. I think systemic risk that we all carry with us. It's otherwise we would have to decide for a different industry. But I think two things are super important. First, Yorick, I love your how often you highlighted the dollar cost average. This is what I'm preaching day and night to friends, to families, when they come to me and tell me, hey, Mo, I have 20,000 euros. Where should I invest it? The first thing I tell them is don't invest it in one shot. So I think this is something where we have to educate people per se into a totally new way of investing. Investing is considered very often as one-shot investments and then wait 10 years, people, and this is like the human being is, we are all not homo economicus. We are everything but a homo economicus. We don't want to invest something for 10 years and leave it where it is, we all know this, and the more fungible an asset is, the more people are likely not to have this holding period. This is the reason why many governmental schemes have this minimum periods to incentivize people to not sell their assets. So per se, we are fighting a human behavior pattern, which is, hey, as soon as there are some gains or some losses, people tend to sell far too early, right? And I don't want to reach out now about all the patterns. Just what I want to say is we have to train and to educate people to a new way of saving in investment products. So far, we are living in a culture that learned over the last century, saving has nothing to do with investing, because saving is just give the money to the bank And by the way, you don't carry any risk because up to 100,000 euros, you're covered by governmental schemes. Now we are coming into more and more a situation where we say, this doesn't work anymore, my dear. Because if you do it that way, you're literally losing money because of inflation. And this will not change over the next 5 years for sure. Interest rates are most probably not going to pick up to 3-4%. Maybe they pick up to a level of -20, -10 basis points, although something that I doubt as well, given the European situation, especially after the COVID period. However, this is one of the most difficult tasks for us, for the mass brokers. I think, especially for brokers who are specialized on the active traders, it's less difficult for them because these active traders see every drop as an opportunity. For mass clients, it's much more a risk that these clients run away. And second, I think it's also important to define these potential risk of crashes. As long as we are living in a world where we have so much liquidity and over liquidity, I believe that if it's not a political crash, if it's just an economic crash, we will always again and again see very quickly recoveries, right? As we saw, and you're right, Tycho, in 2018, December and Jan 19, this big small cap drop, it was heavy, but it recovered also in, I think, 8 to 12 weeks. The same we saw last year in April 2020, right? When the markets dropped, I think the biggest drop in the DAX, the lowest point was 8,400. For God's sake, 18 months later, we are now at almost 16,000. So we doubled since then. So the opportunities are there. As long as the liquidity is there, a crash will be much, much more harmful to this industry if there would be alternatives. So combine the non-existing alternative with a dollar cost averaging. Investing in diversified equities is the best thing you can do. And also this is something that Yorick brought up, the robo-advisors, the asset management discussion. There's a certain number of stocks to reach a beta of 1 that you need. So putting in robo-advisors 5 ETFs together that carry 80% the same stocks will not change your beta. So this is also something that I try to tell my people, the sales and marketing, please, it doesn't make sense to have a robo-advisor. If you take an MSCI World, you cannot have something that will perform better in average than an MSCI World.
Hey, Mohammad, you mentioned interestingly the lack of alternatives. How do you look at cryptocurrencies then?
Wow, a good one, especially because the question is it an alternative to classic savings? For me, we started to define savings as cash deposits, right? Let's go a step before. We defined savings usually as cash in the pillow, right? Like Granny did it, right? This is where she kept the cash. And then we developed over time into a situation where people said, hey, like, you can bring your cash to the bank. So this was like the second generation of savings. And I believe we have a third level of generation or third generation of savings, which is make use of the equity markets. Because when we speak about savings, it's usually about long-term periods. With respect to cryptos, it's a very, very interesting asset class that clients are asking for. We see that. However, until today, I think no one can really say whether this is going to be an established saving alternative, yes or no, especially because it's mostly used for, I would say, rather short-term profits or generating short-term profits. But per se, definitely something that might develop into a further asset class. But as you said, something that I would only put into a certain portion into my portfolio, right? So what is the total market cap, for example, of Bitcoin currently? I don't know, 500 billion most probably, more, less. I'm not sure about it, to be honest. But that's exactly the point. Why should I overweight Bitcoin to Apple stocks if I want to own the market? So this is, however, what very often happens, right? That people go down with the same position into Bitcoin or 5 times the position in Bitcoin, but avoid Apple shares, where I say, hey, wait a moment, in the global market, the Apple shares have a weight of 3 or 4 times of the whole Bitcoin value. So yes, it could be an additional type of asset class that I would put into the composition of a potential beta portfolio.
Interesting. Now, it's interesting that you mentioned it as an additional asset class, not an alternative.
Yeah, absolutely.
Okay, Yorick, I wanted to summarize on your education point. So, if I understand correctly, you educate investors to not only to retain them, but also because you have a responsibility to make investors sure they are exposed to financial risks, and you want that they invest properly.
Well, I think everybody as a broker has an obligation towards their customers, right? And I think, I still now just speak on behalf of Bucks, but I, I, I think I can safely say that I can speak on behalf of all the brokerage firms. Well, maybe not all of them, but at least the ones here in this room that, we have a duty of care. And that duty of care doesn't stop with just providing low cost services or providing good customer support. It starts with helping people actually build wealth for the future. And look, we of course have a lot of experience because we've been on the other side, right? We've launched a speculative mobile trading app, right? And so we know what short-term speculative trading is like and what the impact is for the customer. And so we definitely also understand what it's like to make sure that people build wealth for the future over a longer period of time. And in the end, that is something that I'm preaching to, like Mohammad says, to all the people I know. People think that because you work in a brokerage firm that you know exactly what the product is you need to invest in. That can't be more wrong. I know what I see as pitfalls. I see what customers are doing wrong. And a very simple example, I think, Mohammad, you also mentioned it, is, take your profits too early and let your losses run, right? It's psychology of the person. We as people, if we have a certain profit on a position, we're very inclined to take that profit because that's money in the bag, right? Whereas if you lose money, then people have the tendency to keep it open, those positions, because, well, it will recover. Well, it might not. And from that perspective, the trend is your friend. And that's just an example of behavior that you need to change. And the only way to do that is to properly educate people.
Yeah.
But it also ties into the long-term success of all our companies, right? The only thing we're looking for is like successful clients. Like there are other parties out there, and I won't name them here, which have churn rates which just, well, makes you puke, I would say. And successful clients will, in the long end, bring in revenue. This is literally where we're looking for. And I very much agree with you, Yorick. I mean, it's very hard to say what to do exactly, I would say, like buy this stock or buy that stock, but it's pretty easy to explain them what not to do. And there's a lot of in between what to do and what not to do, but it's definitely something we all should focus on and which we all focus on nowadays in explaining our clients, taking them along. Please don't make these stupid mistakes. But it ties into our own models. There is a commercial aspect to it as well. Successful clients are key for your long-term model.
Absolutely. Yeah, absolutely. Otherwise, you would spend 90% of your profits every year to re-win a new client base that you churn after 2 years. And you said you don't want to name them. I don't want to name them either. But look into all CFD market makers. Fortunately, the regulator has forced them to put out how much their clients lose. But if you read that sometimes they say 85% of our clients lost their money, you can imagine what churn rate that is, right? So 85% are losing their money. It means you have every year to win 85% of your revenues. And when we look, for example, into our revenue structure and how much of our revenues are recurring revenues, that is a super important point. And this is, I think, also what Yorick is referring to exactly educate clients. The more you educate them, the more sticky this asset becomes. And clients in the end are assets. It's like our most valuable assets in the company are our clients and our people. So our employees. We don't have more than that. Let's be fair. So a banking license, yes, it's nice to have. To have your in-house IT is also perfect, nice to have, because it allows you scalability and all that stuff. But the key essence of your recipe are clients that are sustainably profitable, and this is something you have to educate. You have to avoid that they put all their money into bitcoins, or all their money into one share, or all their money into the turbo, and if you manage to get this done in a proper way, you can ensure a long-term relationship, and the long-term relationship usually turns out to be a long-term revenue driver.
It's a good advice, Mohammed.
Yeah, I mean, again, banks are in Europe. So pardon me, but usually 90% of the banks. Let me always have this caveat: 90% of the banks in Europe are shitty because exactly of that point. They lost absolutely the relationship to their clients, and they lost the educational aspect, and they lost everything that is important for a client to be a client of a bank. Because let's be fair, in the end, we are all doing exactly the same. Banking is an absolute commodity, So if you want to stand up and you want to stand out with your clients, you have to do something in a better way. And something in a better way is not always the fee, I'm happy to pay my Commerce Bank a €5.90 per month, as long as the service that they bring to me, it fulfills me with everything I need. And this is also why always we have the discussion. Why do you charge clients €3.90 or €3 or €2.50 or whatever the price is for a trade? Because they say there's a service behind it, and clients are happy to pay this value for that service. But you have to make sure that this client understands why he's paying it. And this is something you have to contribute more than just access to capital markets. This is not a USP anymore.
I think that the long-term vision that for all three of us at least applies is different from what you see at the more traditional players. Once you become a large corporate, well, Henk, you probably know that as well. You look for, you have MTP processes, you have 3-year time horizons where the key KPIs that they set within the company have to be met. So you always have that time horizon, and I think that we don't have that requirement whatsoever. And therefore, I like the fact that and I like to hear also. I'm happy to hear that there are long-term time horizons, because the only way to properly align your interests with the customer is if you also think long-term, because in the end, the success of your customer also needs to be long-term. You can't make short-term profits. You do. If you believe that you can, then you are gambling. So therefore, the only way to properly do that is if your own KPIs are focused on the long term as well.
But doesn't that get harder when you get outside investors in and money and being listed? I heard you say that a few times in the last conference call, Mohammed, as well. Like this quarter seasonality wise, I found it quite interesting how you emphasized it, and I very much agree with. Q2 is always slow, and that seems to be could be conflicting to some extent, right? Or more difficult at least.
It's absolutely great question, and yes, it is. But this is the absurdity of our industry, right? However, fortunately, we have great investors, great institutional investors that are following our long-term strategy. The only thing you have to take care of as a management, if you're a listed company, is not to take too much yourself the short-term perspective, right? And yes, indeed, I complain always about quarterly statistics. Actually, was complaining doing so before we uplisted into the SDAX, because I always said, we don't have a business model that you can track on a quarterly basis. This is absurd. It's literally absurd, because there are time lagging effects, because there are volatility effects, because there are macroeconomic effects, because there are speed of growth effects, there are marketing effects, right? If I spend most of no one of us goes out to the market and says, hey, I'm going to spend every month 4.25 million euros, period, right? We look into the markets, we look into different geographies. We are growing into 18 different geographies. That means we have to take care of competitive environment. What is happening in the markets? You might have seen that we're starting now to go wild in Austria after Hello Bank was sold to Babak, and I think it was ING. Yeah, it was ING that withdrew from the market. So of course we go now heavy into that market to get the right clients. And all this is something, unfortunately, that if you're listed, you have to manage in a different way, or let me put it that way, you have to put more effort into it to explain it to your investor base. The same thing applies, obviously, if you're non-listed and rather relying also on funding rounds that you need. Fortunately, here we are a bit independent with generating triple-digit million cash flows, but also whether it's private or public investors, you have. That is the difficulty for us, right? We have to educate on both sides. We have to educate our clients. We have to educate our investors. Guys, this is not a business model where you can come up and ask me every week for KPIs. You have to give me some time to deliver. And this is what I always say. We have a 1-year guidance. In January 2022, you can shoot me. You can spit on me. You can throw stones. But give me the end of the year to show whether I fulfilled what I promised or not.
Thanks. I'll keep it in mind when I meet with the shareholders again.
Well, I assume with you especially, Tycho, because you have very experienced traders. So I assume that they are very much following the markets and following what's happening in terms of volatility. So I assume your trading activity is also going up and down very frequently. And that makes it, of course, very difficult to have short-term goals anyway.
Yeah, I agree. I mean, we've seen but although it is more in line than I would expect, but Q1 was exceptional, but it was also exceptional for the whole market, I would say. And then, of course, it dropped, but I was comparing, of course, our numbers to your numbers of FlatexDEGIRO, and we dropped a bit less there, but it's not even that much off, I would say.
And now we are in the discussion. What is exceptional now? What was maybe Q1 the exceptional quarter, or was it Q2? That's exactly the point. And I have a clear opinion on that. Sure. It is Q1, because otherwise we would not have guided for in last year. So we wouldn't have guided for 500,000 new clients from the beginning, but we would have done like 800. So Q1 was the exception to the rule, and less Q2. But exactly, this is what you have then to educate for.
Yeah, cool. I think we have to be conscious of time, because I think it's a great discussion. I think that could extend. We probably get you all some beers and keep it going, but it's going to be a bit tough to fit it all, I think, in this online session. So we probably should continue at some other point. I just briefly want to touch upon the questions that were in the chat, just to make sure that we don't completely forget about them. I think some were dealt with. I think one is important, I think, perhaps for Bucks, with the question about how you compare with your business model compared to Robinhood. Could you say something about that, Yorick?
Yeah, so it's good to understand, and I hope I'm not putting you in an awkward position, Muhammad, because I think payment for order flow is a little bit the elephant in the room when we discuss those things. No, so I mean, Robinhood is of course making 70% of their revenues from selling their order flow to high frequency trading firms, which is a model that is being discussed. Let's call it that way. It's a little bit frowned upon by certain regulators, and you probably, if you follow the news on this, then the SEC is having questions about it. And of course now ESMA, the European regulator, sent out a press release where they believe that the national competent authorities need to take a look at it. And even BaFin has expressed an opinion about it, I think about 2 weeks ago or something, where they announced that they are going to look into this. I think Germany, and therefore FlatexDEGIRO is the only country that also allows it under certain conditions. We don't. We follow under the AFM regulatory framework for our zero commission investment product. So we don't make money from payment for order flow because the AFM believes it is a conflict of interest. If you make more money from basically the high frequency trading firms which you sell your orders than from your end consumer, then where do your strategic decisions lie? Yeah. Now, just to fully answer the question, we make money basically from value-added services. So we do charge a commission for certain order types, like market and limit orders. We charge an FX markup on Euro to USD conversion. We also are looking into, for example, securities lending, which is a very common way of making money in the US, while collateralizing, of course, any risks. So there are, a lot of other revenue streams to use. that are not reliant on payment for order flow. So our business model differentiates quite significantly from the one of Robinhood from that perspective.
Yeah, thanks for clarifying that. I think it's definitely good to also explain that to people. Then I think the expectation of growth of customers, I think we dealt with, as well as I think we talked about robo investing. So I think it leaves only like banking as a service. Would trading as a service also potentially create new brokers in the market with the ease of the push of a button? So is it actually becoming easier to become a broker these days? And do you expect that would perhaps flag some new competition?
Don, maybe if you allow me to answer just on the question before,
Sure.
so because Yorick mentioned 2-3 things.
Oh, yeah.
I think the first thing we should have to clarify, by the way, in Europe, the Netherlands is the only country that has a commission ban. So it's actually the other way around. Mm-hmm. So you're allowed all over Europe, whether it's Germany, whether it's Italy, whether it's Austria, whether it's Spain, whether it's France, whether it's Portugal, to receive commissions. Netherlands, the AFM, and there Yorick is absolutely right, believes that it's not the right way. So it's the only regulator that has a gold-plated MiFID II standard that forbids and prohibits any commission payments from product partners. That's, I think, a very, very important point. So yes, the ECB and different European regulators are looking into it. But again, here, I think it's going very clearly into a direction where the national regulators, by the way, because it's not a European, MiFID is a directive, it's not a law. So national regulators have to make out of this directive national law. And the regulators in all those respective countries are going to look into it, especially with respect to the point how you receive these commissions. And one important point is that regulators don't want that you offer only one exchange, for example, or one product partner, so that you passively steer all your client flow to this exchange or market maker. Whereas MiFID has always allowed for receiving commissions as long as you do it because the client decides to go there, right? So if I tell you, look, I have here 3 types of Cokes, and you buy now not the Coca-Cola, but Pepsi-Cola, you yourself, you're taking it out of the shelf, and Pepsi is paying me for each and every can I sell, that's absolutely okay. But if I just put you Pepsi into the shelf, and you only go for Pepsi and I receive the commission, this is something that the regulator should, from my perspective, absolutely scrutinize and even prohibit.
Yeah, and Mohammed, the reason I think is if you go to one money maker, that the spread is for the client is higher there, right?
It doesn't have necessarily to be higher. I would say, however, that a certain level of transparency is lost. You know, you don't give anymore the clients the choice to think about it, whether it is the best price.
Yeah.
During market hours, usually I would say spreads across. I mean, by the way, it's literally a German problem, you know. So we are also discussing it here as if it would be a European problem. Germany is the only country that has a multiple number of exchanges. So this is why it's quite urgent in Germany, right? So in the Netherlands, you can only trade against Euronext, full stop. There is no other big regulated Dutch exchange. So it's mainly a German issue. And in Germany, it's clear that during market hours, prices are, whether it's TradeGate, whether it's Lang Schwarz, Xetra, Börse Frankfurt, it's relatively similar. However, what happens outside of these hours, you know, that is a big question. Why it would create more transparency to clients if they have 2 exchanges they can compare. And then obviously some participants in the market are wondering, why would a broker offer only one exchange? What's the reason? You know, now you could say complexity and all that stuff, but and now I'm giving back to Don to his second question, since most neo-brokers are operating on a banking and trading as a service, they can afford to have also 5 different exchanges. So without much complexity, because they are based on third-party systems. And Chahrour can most probably confirm this. So if you would just take out one, it seems like you're trying to steer something into that direction. And this is the question that the regulator is currently scrutinizing.
Yeah, it's interesting too. Thanks for the response, Muhamad. I think, I still have difficulty with this setup, and I'll explain you why. first and foremost, customers don't know, like with Coca-Cola, your example, right? People understand who Pepsi is and understand who Coca-Cola is, and they often have tried both of the cans, and they know what the flavor is like. In Europe, people don't know. They don't know what the difference is between an execution on Long & Schwarz or Tradegate. And there is no unified best bid, best offer like we have in the US, right? So in the end, people can still get execution against a poorer price. You as a company can still get money for it. And because best execution is happening post-trading, basically, you can always go to the regulator and say, yeah, but look, price might have been worse, but we're offering it against, I don't know, lower price in terms of commission, for example. Or there's another argument that you can give. That makes it very, unrealistic for me to 100% confidently say that there is no conflict of interest. Now, I understand that that's the reason that BaFin is also starting to take a look at it. But I mean, of course, for me, it's easy to say this because I don't make money from payment for order flow. I'm not allowed to make money from payment for order flow. But I have generally also difficulty with the current setup in Europe with regards to payment for order flow because of the way pricing is currently arranged and best execution policies are currently arranged post-trading.
But again, here, just to confirm that, I mean, also we do, I think, less than 10% of our revenues from payment for order flow. So we're absolutely not depending on it. And by the way,
I'm not saying it to you as well. There's another party, however,
because I'm absolutely, with respect to stocks, honestly, I would even absolutely go absolutely okayish to have a FOF ban on equity markets. You know, I believe when you go into specialized products, etc., you know, you can allow for these because people who buy turbos or warrants or knockouts, they understand the structure of such a product. You know, and but with respect to exchanges, I absolutely share your point. You could also leave it out.
No, I'm saying this not directed to
FlatexDEGIRO,
but you know that there is another player that makes a significant amount of money from payment for order flow, and it's a competitor for you as well.
I would say almost exclusively.
Exactly. So I understand that you also believe that maybe on some items we should be a little bit more strict. But let's see what the regulator is going to do, right? They're looking into it now. My personal opinion is always that, you know, regulators, they need time, and it's going to take probably a year's process.
They also think in 5-year terms.
Exactly. If not more. But hey, look, they're doing at least something, which is
absolutely.
But this is what I find interesting, Yorick. So I get the payment for order flow, right? So we can all agree there. But what you see is that the new models pop up, and the new model nowadays, who cares about payment for order flow if you can make 25 basis points on your VIX conversion, right? So this is what I find very interesting. Like, we are an old school party, just charging our clients a commission and that's it, giving them the best possible price. And what you see developing is like all these new models, and they always find new ways. And I'm thinking like, geez, yeah, you can trade for free, but let's charge them a nice FX conversion rate. So this, I don't know. I find it challenging.
But we're trying quite transparent on this, and I know that the DeGiro also charges an FX markup. I mean, to be honest, there is a surface there as well. Don't forget that converting euro to USD means you have to operate a risk model, for example, and you have to have certain exposure limits, and so there is a service that people are paying for. Next to the fact that, of course, we are trying to make sure there's always a option where people don't pay any commission, right? You are aware that, for example, we have a zero order type that's only executed once a day, for example, where people don't pay anything. So there are options. But hey, look, we're not a philanthropy, right? We are a commercial company. We need to make money as well. And that's only logical. We have overhead, but we believe that we've been organized now in a way where overhead is significantly lower than what traditional banks or brokerage firms should be paying. So we believe that with our model, we can offer it in a way that's transparent, low cost, and make it accessible. But still, we need to make money, obviously.
Do you believe that it's transparent? Like, why isn't it I get what you're saying, but like to call it transparent nowadays, anyways, it's also maybe for another discussion, but I find that interesting. What's really in the benefit for the end customer? Maybe it doesn't matter if you do a €1,000 trade. I mean, fair enough. But if you buy for 100K US stocks, this doesn't work, right? Like, I wouldn't call it transparent.
No, but we don't allow trades of 100K anyway. We're a retail investment platform. So.
Okay, sorry. Fair enough.
I think it is a good point that we probably can find some good grounds to get you all together for further discussion. Would love to see that, and happy to perhaps help get you together, maybe for a nice dinner or some drinks.
Let's make it happen.
To further elaborate.
Absolutely.
Yeah, it sounds like there's plenty to talk about. But for the sake of time, before otherwise, if we keep on going, there will in any case be 0 listeners left. So that's also a bit of a shame, of course. So Henk, over to you, maybe to wrap it up.
Yeah, so thank you all, Mohammad, Yorick, and Tycho. I think it was great to have you on the panel and to got some insights in the online brokerage market trends. So thank you.
You're welcome. Thanks a lot for having us.
Thank you. Yeah, great discussion. Thanks, everyone.
Cheers.
Yeah, thanks a lot. It was really wonderful to have you. And that said, we're actually going to go to the final element of the basically, I still want to thank you as well, by the way, Henk, for helping put us together. And I think it's been great to have been doing this together with you on behalf of ING. What we'll do now is just a brief pub quiz for everyone who wants to join via Kahoot, if you're familiar with that, for just a bit of fun to test everyone's fintech knowledge over the recent news and see how that has gone forward. Let's see. I'll share the screen. Here it is. Here's the game pin in the chat. Oh, no, it's not coming. Here it is. So go to kahoot.it and then you could actually enter the presentation and you can choose your own name. You can be a bit commercial if you want. It's best to do it at another device just to make sure that you don't lose out on this presentation. And then here we'll show the questions and you're able to press the button on your phone that actually follows the color or that matches the question. And it's good to know that you actually get awarded for the time that you spent. So the faster you answer, the bigger chance of getting points. Here we are. We've got some good contestants coming in. Robinhood's there, Dogecoin. Always nice to have them on board. Sea Level. Nice to see you all here. I'll wait just a slight moment for you all to get on board and hope you will join the fun and test your fintech knowledge. See some crypto lovers for To the Moon. Satoshi himself is here. That's also very nice. All right, just a final moment. Please check in if you can join still. Then I'll move to we've got a small group of contestants now, but I'll move to the questions and let's see how we can move it. And good to know, you can still join. There's a little prize for the winner. So we'll go to the first question. Which market is PayPal bringing crypto services to? Is that the UK, Africa, Australia, or Asia? I think this is a fairly easy one if you've listened earlier to the monthly overview. Probably you have to find your way a bit in the app, but I see that most of you got this right. It's indeed the UK where PayPal is starting these crypto services. Then we get to see how people scored. We see that To The Moon is actually on his best way to the moon with the highest score so far, but there's a lot that can happen in 10 questions. What kind of services is Google currently offering by tying up with a fintech? So through GPay, you can get new services. Is it insurance, fixed deposit, crypto payments, or cross-border payments? Also discussed earlier. Let's see if everyone's coming in. Yes, it's everyone thought it was crypto payments. It was actually fixed deposits. It was indeed they haven't moved into the crypto space just yet, but they do move into deposits, which is also quite interesting alongside their payment service. What has happened to the scoring? Andre is doing very nicely. Well done. Let's see what happens next. Indonesia and Thailand launched an instant cross-border service for what? Identity documents, Forex, remittances, or QR payments. Most of you got it right, but it was still a bit of a challenge, I see. It was indeed a QR payment linkage. So they used the same standard QR codes. So it's easier for people to actually use the same payment systems. Quite interesting. How's it go? Andre doing very nicely. All answers right until now. Very good. Let's see what number 4 brings. The Central Bank of Nigeria is scrutinizing 4 fintech firms. Which one is missing in the row? Is that Flutterwave, Paystack, Trove Technologies, or InterSwitch? The other ones that are in any case already here mentioned are RiseFast, Bamboo Systems, and Chaka Technologies. I think this is a bit of a tough one, perhaps. Yeah, you see, it's Trove that should have been there, and most of you voted for Paystack, but indeed this is one for the ones that are really in the know, or did the best guess. That's also possible, of course. What happened here? Dogecoin, up on the rise, always coming out of nowhere, going up. Circle has filed with the Securities and Exchange Commission to become a bank or a credit union, a payment firm, or a mortgage company. So, fintech firm Circle in the US has filed to become what exactly? A bank, indeed. So they really are becoming a challenger bank in its own right, and did a good job at that. It was a tough question, so to say, because they are already a payment firm, so they didn't have to apply for that just yet, or not anymore. What happened here? To the Moon is right on the rise again. Andre is still steady at the top, but people coming in closer. So let's see how that goes for the last questions. China is now actually launching digital currency. What is it called? Which one are they using for it? Is it Ethereum, Dogecoin, the Yuan, or the Euro? Relatively easy one, I think. Yes, most of you got that right. It's indeed the digital yuan. So they're really experimenting with their central bank digital currency to use as a general payment means. And China is quite far ahead with that. Interesting to see how that further develops. Andre still on top and a bit of a shakedown below, but To the Moon still running up. Let's see what happens next. Razer is about to shut down one of its services. So Razer is a gaming company, and they are going to stop something. What are they going to do with? What are they going to stop with? Gaming hardware, custom design, virtual reality products, or e-wallets. As we're here in the fintech space, you might understand what it is. Indeed, it's the e-wallet itself that it needs to shut down. Yeah, interesting, because I think you see that a lot of parties are actually just experimenting with trying to move into the space and doing this. Curious to see how that will evolve, and they will probably look into other ways of working with payment means. And we're still steady on top with To The Moon, following in a small distance. Venmo is letting credit card holders buy crypto. But with what kind of service, with what kind of means? Is that Apple Pay, with dollars, with euros, or with checks? Also one of the players that actually is jumping on the crypto bandwagon, but in this case for payments. And a lot of you thought it was Apple Pay. It's actually dollars. They just do a dollar conversion, and no Apple Pay just yet. Well, it is interesting that you all thought it was that, so maybe that's a good suggestion for them. Oh, Dogecoin is taken over, doing very nicely. 2 more questions to go. Australian banks re-engage with Apple for what? On crypto, on an NFC chip, on location services, or an Apple Wallet? Where do the banks want access to? This was a tough one. I think this was quite a lot in the news, especially about the fact that Apple, of course, had its NFC chip only available for Apple Pay. But now you see that the banks want alternative players also to be able to access the NFC chip, and there's a big riot has been about it. But in any case, they're now again in conversation about it. What happened here? Only a small movement with the C-level class. And then the final question. Let's see what happens. This is one for the ones that actually visited our member assembly yesterday. You can only spot your unknown unknowns if you have new perspectives. Who said this? These are our board members: Hein Vollaert from Rainbow Ventures, Marcel Prins from APG, Fleur Desjardins from InShared, or Hesselkuip from Biscuit. Who was the one who said this yesterday? Ooh, this is a tough one. It was Fleur Desjardins. Who joined us in the meeting. So thanks for checking this. But apparently this was also a hard question, I think, for everyone to do. But it might give a bit of a shake-up. So let's see now what the podium brings. To the Moon is third. Andre is second. And who do we have then as a winner? That's going to be exciting. It's Dogecoin coming out of nowhere. Must have had some support from Elon Musk probably somewhere along the way. Very well done, very nice done. So what we do now is that you actually, if you would make a print screen of this and actually let us know in the chat privately your email address and personal address, so we actually can send you a nice thing for winning it. But of course we have to identify first who Dogecoin actually is. Quite a challenge sometimes in this in the world of crypto. Thanks for joining. I hope you enjoyed the fun. And now I'd like to head over to you, Garvey, to wrap up the day.
Yeah, thanks, Don. And congratulations to Dogecoin for winning today's prize. As mentioned, please identify yourself so we can send you a little bit of a prize for your win today. Can we actually stop the music? Because I think it makes it a bit hard to hear. Yeah, thank you. So again, congratulations. Before we close off today's event, I'd like to make a little bit of an announcement, and that is that I'll be leaving Holland FinTech at the end of the month. So this will be my last meetup as meetup host. Of course, I'd like to have this opportunity to thank the whole Holland FinTech team for making the past 2 years really special for me and for helping me grow both professionally and personally. And of course, I'd like to extend my thank you to all the members that I've had the pleasure to deal with. And rest assured, I'll be reaching out to every single one of you to inform you about the next steps. But I just wanted to make sure you're informed. With that being said, I don't want to end my last meetup after 2 years on a sad note, because the show must go on. So let's perhaps have a look at what's coming up in the next few weeks, and maybe let's bring back the slides. So as I mentioned, as usual, we'll have the next monthly meetup on October 8th, and that will be the first hybrid event after over a year of not meeting each other physically. So we will be announcing a location soon, so you'll have the option of joining both physically or simply online. And then a small mention on a member exclusive meeting that we have next week, and that is specific for members that will be participating in Money 2020 and want to discuss and share best practices with each other, and of course prepare it best for the conference. So feel free to register if you're interested on our website. With that being said, I think it's time to close off today's meetup, the September edition of the Holland FinTech Online Meetup. I'd like to thank you all for your participation. Again, thank you for the great discussion to all our speakers, and I wish you all a great weekend. Bye-bye.
Thank you all, and thank you, Gabri, of course, as well. And enjoy your weekend.
Thank you. Bye-bye.